now I'm going to introduce the next panel. We've been talking quite a bit about the importance and the power of finance in solar and the role of capital in keeping our planet habitable. And so the next panel discussion is called, let's see, what is it called? It's called The New Compass of Finance, Values-Based Investing. So one of the speakers you've already met is Joel Serface. Joel is, I actually just sent him a LinkedIn invitation because it's not only do we have the same hairdresser, but he's doing some cutting edge stuff in terms of reducing the cost of capital and facilitating this, speeding up this shift to clean energy. So he's going to continue to talk about that from the perspective of investors. Additionally, we've got Rod again, and he's already been introduced, so I won't go more into it, but he talks all about debt and capital structure.
A last-minute ad and a poor substitute for the person who couldn't make it, but
we can talk about it from a
corporate sense.
A pickup player. And then thirdly, a new face up on the stage. This is Brett Byers. So Brett, his company Partner Ventures, has been in the capital and venture capital space for 20 plus years and filling a role basically helping projects and investors cash out and transfer a new investor in when an old investor has to go. And that was, I guess, exciting and fine and well, but he got bitten by the renewable and the clean and the sustainable bug, and he's going to talk to you a little bit about what he's doing now that's new. So without further ado, I'm going to turn it over to the group of three.
You want to lead us, Joel?
Well, welcome back. Thanks for letting me actually speak for a little while as opposed to moderate. So it's a pleasure to be here at AREDAY. Thank you, Chip. Values-based investing, what is it? What does it mean to us? How do we define it? What are we doing to make a difference in the renewable energy world through our values-based approach? I've had a long journey to get to where I am today. From the time I was a kid, I went to geek camp and I studied renewable energy, I studied green building and so forth. I've been looking at this stuff since the 1970s. And every time I try to get away from it, I always found a way back in. And so I did everything from management consulting to being an engineer to working on policy and working as an investment banker. But every time I always came back to renewables. And I finally had to take inventory of this and say, why do I keep on doing this? And the reason why is because it's so important. And over the last probably 15 years, I've had the luxury to be able to be a venture capitalist in this space, invest into many of the formative companies, but also recognizing that I needed to live my life to be able to go expand the opportunity for renewables. So in addition to investing in companies, I invested in nonprofits. I invested my time equally into being on boards of my startup companies as well as nonprofit boards to be able to expand advocacy and so forth. And so all these different pieces have built me to where I am now. Over the last 4 years, I saw some major problems in our renewable energy investing economy. In other words, fracking was beginning to take off. There were billion-dollar bets being made on oil and gas investments. And I didn't see billion-dollar investments being made into renewables. So we took on a problem in Texas to say, can we actually do something that's at the same scale of replacing old energy with new energy? And my business partner in Brightman, an earlier firm, and I got together and said, can we do a coal for renewable portfolio swap? And we came up with a way to be able to do that, to be able to put together a huge amount of renewables that were lower cost over the next 25 years than operating a conventional coal-fired power plant that was fully depreciated. That turned into an idea that helped me understand that to be able to make a big difference, I've got to tackle putting more renewables in the ground. Not just the technologies that we go put in the ground, but find new ways to be able to go put more of those in the ground. So that was one way to do it. We took the next step, which was how do we significantly lower the cost of developing a project? So from the time you identify a piece of land and identify the transmission line to putting all the capital in for all the studies or whatever else, the risk capital that goes into this, how do we shrink that? So at Brightman, we did that largely by outsourcing development and keeping our development period really confined. But to be able to do that time and time and time again, we realized we needed to do a couple different things. We needed to develop a software platform to be able to automate a lot of this, to crush the soft costs of this, to be able to open up tools to earlier developers so we could standardize lease agreements and contracts, and so that they find the places that are best to develop, they're going to be the lowest cost, that we need to put immediate projects in the marketplace. From an operational perspective, we said, there are lots of things we've never applied to the renewable energy finance space. We get to have project management internally. We can automate procurement. We can improve the number of vendors that we use if they keep on hitting our milestones, and we ding the ones that can't perform against our needs. Nobody else in the industry is doing that. Nobody's automating payments. Nobody's tracking a contract versus all the deliverables against that contract in real time. Nobody's managing an entire portfolio and looking at that entire portfolio versus all the risks in the marketplace in real time. So we finally said, why don't we go build it? That's Catalyze. That's what we're doing now. And what that does is as we open this up, that means we can manage like not only 10 developments at a time, but hundreds of developments at a time. We can learn from one to the next and apply it all over the world. We can do development in West Texas as well as we can do it in West Africa. And so we're working on doing that right now, but that also opens up the opportunity to bring in a lot of non-traditional investors to be able to invest into this risk stack that nobody invests into today, that everybody's afraid of today because they don't understand how to be able to manage the risks. We are managing the risk, we're communicating those risks, and we're giving returns, and we're opening up the door to many other investors, while at the same time standardizing the process for the long-term capital players that want to have access to more renewable energy projects. Net, we get to increase the order of magnitude of projects that are developed industry, and we get to cut the cost of development by an order of magnitude, which means we get to, hopefully get to as much renewables in this world as we possibly can. That's the vision. In addition to that, we get to continue investing into other technologies. We're going to take, like a B Corp would, proceeds from our vehicle to be able to reinvest into new technologies that we can then plug into any one of our projects throughout the world. And so all of a sudden, I get to play my values out in everything that I do every day, aligning those so that everything that I look at and everything that I do and everybody I bring into this bigger system of developing renewables gets greater benefit. And our investors get greater benefit, and we also get to see the results of what's most important to me, my biggest value, which is creating a livable planet so that my kids can have a livable future like I had. So.
Great. Super. Well, thanks, Joel. I learned a lot, and that's a fabulous story. So I'm Brett Byers, and I'll tell you my story. The name of this panel is Value-Based Investing. If you had asked me 10 or 20 years ago what that meant, I'd probably tell you that means I get a really good deal, meaning I buy something for 50 cents that goes public tomorrow at $1. So that's my idea of values-based investing. But
they're not mutually exclusive, so.
But they're not mutually exclusive. So basically, I ran the venture arm of a firm called VCFA, which was the first firm in the secondary business of venture capital. And we would basically give liquidity to folks that invested in venture capital that needed early liquidity before the companies went public or got sold. And kind of the prototypical situation was a Fortune 500 company would make a bunch of strategic investments, maybe in companies they might want to buy, maybe in companies where they might want to buy software from those companies. And a new CEO comes in and says, what is this stuff? This is not strategic. What was my predecessor doing? Fires all the people doing it. And then hopefully I come along, and as a good value-based investor in my old way of thinking, I would buy these assets very cheaply because the new CEO did not value the assets. It's a Fortune 500 company worth billions of dollars. So this little tiny $10 million portfolio didn't mean anything to them. And hopefully I could buy it at $5 million. And it actually included companies that were mature because they've been in the portfolio for a number of years. They're about to go public. They're about to be sold. And we'd get a really nice rate of return. And I'll tell you, this actually is one of the easiest areas of venture capital investing because my partner used to refer this as betting on the horse when the horse is 3/4 of the way around the track. We basically were investing in late stage companies, but quite often at early stage valuations because the selling companies were focused on some historic cost that they paid 5 years ago. So I can tell you we did very well. Every single fund we ever had was profitable, good times or bad. And I sort of retired from my firm and moved to a new firm, Partner Ventures, where I still do that with a partner, but we buy just direct interest in companies where we go on the board and really help them out. But I had an awakening about 3 years ago when I realized, and I'm sorry it took me so long, that actually global warming is a really big deal. It's not just a few lost beaches. It's not just a little bit of extra heat here and there. That it's actually, really a potentially an existential threat to virtually all life on Earth. And it caused me to do a couple things to revamp my life. I've been focusing on conservation as a mechanism to forestall global warming, and I'm going to talk about that on Thursday. It caused me to put a big solar array on my house and buy a couple electric cars and make other changes in my life. But it also had me rethinking my investing. And I can tell you my toes are just dipping in the water, but I have made 5 clean tech investments, and they're quite small investments, but it's something that I'm increasingly looking for in investing. And it strikes me that you really can make really good money and also do great things for the Earth. And I cataloged the different types of investments I have, and 3 of the 5, frankly, they don't require any government action to be successful. And in fact, all they require is just taking advantage of efficiency changes, and that leads to profits. And it also happens to lead to a better planet. So it's really a fabulous example where you can make a profitable investment, you don't need any government subsidies, and you actually can make a really fabulous equity return. So that's kind of been my story. One thing that I have found that's interesting is when you do have altruism in investing or starting up a company, it is a little tricky to balance kind of the hard-nosed business investment thinking or business executive thinking with the altruism of your goal. And I see this in myself, and I see it in entrepreneurs starting companies up. And one thing it can lead to putting a lot of money into a project that's before its time. And because you're just so religiously devoted to it that you just go full blast down the road. So I do find that if you have this strong strain of altruism, you really do have to have even a little more self-control on kind of the hard-nosed business thinking, both as an executive and as an investor. And it's not just the timing. That's one thing that's been the death of course, a lot of companies come before their time, regardless of whether or not they're clean tech or altruistic companies. The other thing I see is quite often the altruism can drive an executive to make a really complex business plan because they basically have to create an entire industry and ecosystem. And that makes it really hard to succeed. So,
and welcome to the early days of clean tech investing.
And that's maybe I'm stating the obvious. So anyway, that's a little bit of my story and transformation. And I think it's actually fabulous to do investing that's based on both values and a good value in terms of making a lot of money.
You guys have covered a lot of good ground. I come from a corporate background. My team, we were at General Motors. We were in the investment tax department of GM, and at the time, GM was the largest tax credit syndicator in America. We were focused on low-income housing, new markets, historics. Felt like a natural progression to include ITCs. GMAC and GM blew up like a Roman candle. Back in 2006, 2007, our credit rating went kaput. And as a result of that, our financing expenses made us uncompetitive, and the tax-incented investment department was basically dissolved. We spread out to all sorts of different corporations, and frankly, the GMAC tax credit team is at every large institution that is involved in this space right now. That department was deeply committed to doing well and doing good. And low-income housing is something that's needed throughout the country. And it has a lot of characteristics and similarities to what you have to do to put together an investment tax credit deal, which is solar. And we were always driven, our team, to do as much good as we possibly could. In 2007, that's when we started. And when we had over 100 different corporate investors with us during our time at GMAC. And we took some of those with us. Our most important investor that we took with us was U.S. Bank. At that time, U.S. Bank was not doing renewable energy investing for a variety of reasons. They worked through us, and we were able to get it kicked off. Out of that pool of investors, it's slowly grown, and a lot of these departments, the tax advantage investing departments, do want to get involved in this space for the altruistic reason that they're recognizing that climate change is something that needs to be combated, and this is one small way that they can participate. And we see the growth, and we see it being more and more accepted. There was a time when we first started out with this that people didn't believe that a solar panel could last 5-10 years, even though there were plenty of examples where these panels would operate well for 40 years. So we're making a lot of progress. A lot of corporate America is supportive and doing whatever they can in some part, whether it's tax equity investing, whether it's buying their energy directly, whether it's investing in clean water. I mean, it runs the spectrum, but it's been really encouraging and rewarding to watch the growth of our space over a relatively short amount of time. And while tax equity and a lot of these things remain difficult, we get more and more folks willing to, or coming to us, wanting to do this kind of investing because it's corporate social responsibility or CSR driven that's giving them actually a pretty good return.
So the question is, what are we all doing to extend, this value-based, approach? I mean, do we get to be leaders? Are we going to go invent things? Are we going to help each other out? What I can say from, working with Rod over the last couple of years and getting to know this story, I already understand where his values are, and I know that we're going to work on deals together. We're going to work on opportunities together. I love the introduction of you into this space where you come at this over a very short period of time, first time in this community, and of the things that you shared with me before we got here and what we're doing here helps me align more closely with what your mission is, just from a values-based approach. So I want to just say thanks as we're kind of closing this out without a lot of guidance. Thanks again to Chip for allowing this conversation to even happen, where we all get to have these wonderful speakers here. We're all working on values, the values of the planet, the values of saving this planet, the values of extending, our economy and our future, all in the same conversation. Everybody that I've had the chance to interoperate with, in all of this has allowed me to be able to feel more aligned with their values to want to go do more of this. So I want to say thanks to Chip and Sally and others for convening everybody to have the values discussion that we are today. And I hope we continue the conversation outside of this in the next break, about where we can go with this. So that's it. Soft finish.
Yeah,